connect with our chartists then and understand that which are the levels that you should be watching out for, as well as what should be your strategy. Let me welcome Nooresh Mirani as well as Kunal Nooresh on the show right now. A very good morning, gentlemen. And Nooresh, I want to come to you because just yesterday, when there was a gap down indication at GIFT Nifty, you did suggest that this dip could actually be bought into. And kudos for that. What a recovery on an intraday basis. But how is the setup looking like? It's been a decent global handover, and even GIFT Nifty is indicating for a positive start. What do you make of Nifty 50?
So we've seen a decent recovery, and it's with a good breadth also across the board. Now we've crossed the day before, say, doji candle, so that 22, 250, 300 mark is crossed. So that is your first indication of a short-term reversal. Now this should ideally go towards the 22,800 mark, which is where the earlier supports were and should now act as a resistance going forward. And then we take it from there. So for now, we get a new range, say roughly 22,000 odd levels to 22,800. And 22,800 is what I would expect in this move. And then we take a pause. And if we start sustaining about 22,800, it makes a much better recovery going forward.
Okay. Kunal, have we come in that zone of short covering panic zone? I mean, do you think short sellers now would be forced to cover because the positioning in the FNO by FIs is still short?
Yeah, they're still on the short side, and yesterday was one of the first days where we saw classical short covering, because when you look at the kind of stocks which are moving up higher, they were the ones which are beaten down significantly, whether it's in the span of the last 1 month or whether it's in the span of the last 3 months, 6 months of the market selling. So there was a very strong evidence of stocks which are moving up higher by a higher percentage margin as compared to the ones which have been doing reasonably well. Just for example, I think we've been discussing about the banking index over the last few weeks, and many of the private sector banking stocks, they were more or less sideways in the last 2 days of this market recovery. But the ones which were beaten down significantly, the FMCG stocks, the auto names, then you saw pick up in the metal counters, etc. But there was good amount of shorting, which was seen, real estate stocks, energy space. So I think many of these spaces had seen a good short covering move. That I believe could be a classic blend. And I would probably expect that we should now be looking at a two-pronged phase pickup for the markets. One would be a very strong blend of short covering across individual stocks. So I think a strategy should be on the more beaten down stocks and sectors, especially which have been falling for the last 6 to 7 months consecutively. And then the second would be to look out for stocks in terms of breakouts and the ones which have been relatively very strong.
All right.
If you like this video, then like, share and subscribe to ET Now.